Well, good day, traders. And certainly if we look straight at the boards, I'm going to go have a look quickly at what's happening in FX markets. Aussie dollar, I think, is an interesting one there. 70.34. We're pretty flat on the session, down 5 pips or so. But the market's been grinding higher. And I think that's a really interesting concept, because if you have a look at the daily chart, you can see around that sort of 70.40 into 70.50. This is July, the recent highs that we saw there. A sustained breakthrough there would obviously be very bullish indeed. And I think, you know, people don't want to be short, don't want to really be long Australian dollars. People are loath to be so, mainly because hedge funds are penalised for being long in terms of the cost of carry there. But I think if you're having a look at the options market, have a look at implied volatility in Aussie dollar for the week, and that involves looking at what's happening on Thursday's employment number, where the market's expecting that to be at 5.2%, no change there, and 9,000 odd jobs being created in the economy. The implied volatility suggests, with about an 80% or 90% level of confidence, that we should get up to about 71.30, or certainly go no higher than that level. But I think, you know, if you look at the daily chart at the moment, you can see a situation where, you know, the Aussie has been grinding higher. In fact, over the last 5 days, if you have a look at this performance table here from Bloomberg, you can see that the Aussie, and even more so the Kiwi, which has put on 1.9% over the last 5 days, are the currencies which seem to be working best. And actually, if you look at the daily chart of Kiwi dollar, you know, that's looking quite constructive. That looks like it wants to break out of its own highs as well. So they're the two currencies which seem to be getting the most of the life, although as we can see from the table today, they haven't really been overly performing. None of the currencies have seen big moves in the early parts of Asia we've seen so far. Have a look at sterling Aussie. Have a look at sterling against the Kiwi dollar, or Euro Aussie as well. I think, you know, these are the currencies which have been really breaking down. And if we married the strongest with what has been the weakest at the moment, you can see some really, really strong downtrends. Certainly that sterling Aussie has been a cross that we've been seeing a lot of action in. I think that probably has an opportunity to sell at any kind of higher lengths. I think, you know, will you be doing so and following that primary trend that we've been seeing. So sterling Aussie is one that really need to keep an eye on. And we did see the RBA minutes coming out today, and I think the new development there is that the RBA have said if they will cut again, quote, if needed, unquote. That's a kind of a new development being through. But if you have a look at the swaps market, we're pricing in about 24 basis points of cuts by the end of the year. And that seems about fair. There's probably doesn't seem much logic that we're going to see less than, or certainly more than, one rate cut coming through. So the Aussie is probably fairly valued. As we go through the afternoon session, we are keeping our eye on the US dollar. At 10:30 Eastern Standard Time, we do get the retail sales numbers coming out of the US. That is an event risk. The market and obviously the Fed are really quite keen to see just how weak or how strong the US consumer is. The market's looking for about 0.2%. We want to also focus on the retail control group. This is the element of, or the basket of goods which feed directly into the Q2 GDP read. The market at the moment is looking for about 1.8% on that Q2 GDP read. That's down from 3.1%. So that will be an event risk. The control group, as I say, the market's expecting 0.3%. So obviously, depending on the beat or the miss, that could determine how much love we see for the US dollar. Consider as well that we've got about 64 basis points of cuts being priced into the US curve by the end of the year. Again, that feels about right. There doesn't seem like we're going to see 3 rate cuts, but at the same time, you can make a pretty clear argument for 2. So, you know, the fact that we're pricing in just over 2 rate cuts seems fair. And again, you know, it's been probably adequately priced into the US dollar. So we're questioning, you know, what is the next shoe to drop? What is going to give in that regard? So again, we're watching what's happening in the dollar index charts. In terms of equity markets, bit of weakness coming through in Asia. You can see the Hang Seng down 43 points, the Japanese market down 159, Chinese down a little bit, not really finding much solace from yesterday's really very strong industrial production numbers in China, the fixed asset investment, and also what we saw from the retail sales numbers. You know, that hasn't really seen much follow through. We go through into the US session. If you see the opening calls at the moment, again, they're pretty flat. You can see Wall Street down 9 points, the FTSE down about 3. So pretty flat opening calls for the European markets. We want to keep an eye on what's happening in the US corporate space. You know, there's going to be a whole raft of earnings that really ramp up, mostly on the banking side. We've got JP Morgan, Goldman Sachs, Johnson & Johnson, and Wells Fargo. JP Morgan, I expect to see some reasonable flow going through. I think, you know, the market's expecting that to have about a 2.1% move on the day if you look at implied volatility there. So yeah, again, just to see the outlook of what these companies are saying and their earning capacity as well. So certainly, yeah, US banks very much in focus tonight in what is going to be a flat open.